Why are bond yields rising? Hi, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hey, Dale. Happy Friday.
Thanks, Maggie. And in my residency, this is the third week. It's the most consequential week since I've been doing this. There was a lot of brain surgery in the market this week. Just being a resident, I had to pass the scalpel on. But we did have, in my view, two important inflection points happening right around the beginning of fall and happening right around an eclipse on Sunday. And actually, I did a pretty good job of forecasting the action in the bonds in the 10-year. Last week on your show, I said that I don't believe that the 10-year will take out 4%. So here we are, that's 4%. I said on the Fed news, they may try and take it down one more time. But to me, this looks pretty good. If it could be the beginning of something larger, which is so counterintuitive with the Fed embarking on, even if it's a slow type of easing, the bond vigilantes are saying the same thing they did back here. This was
All
the
right, I'm
last
I'm
time.
gonna put the chart. Let's put that chart up.
Okay, is it up?
And yep, it's up. And I'm gonna dive into it. First, I want to say hey to everybody joining us live on Substack and YouTube. Great to see you. You also made it through the week, which is amazing. And we're going to talk a little bit about some of these big pivotal moments. As always, if you have any questions or comments, drop them in the chats, and we will get to them get to as many of them as we can. Okay, so we have the 10-year chart up.
Yeah.
Yeah. So walk me through what you said, because it was very interesting. First of all, a lot of people were confused by the Fed meeting. There was a little bit in there for everyone, and we kind of saw that initially. It took a little while to get that market reaction. But what did you see that makes you feel like this is so pivotal, and what levels are you keying off of here?
Well, 4%. People should go back and listen to what we talked about last Friday. It's been a target of mine as an objective off this breakdown from 420. And for even the week before, I said I thought 10-year yields would not take out the floor of 4%. So this was, as I said, an opportunity to sell treasuries on the news. I said that was a trade, and TLT got up to, right here. This was the Fed cut at 91, and you look at the weekly chart, it's not so positive. Now, it's got one chance to hold, and that's the breakout here around 88 and a half. But it's very possible that's it, because I do have conviction that eventually, if we take out 420, which is a real big level in the 10-year, the next stop would be 440. And if we take out 440, the next stop is a breakout over 470. So along with this, I also believe the dollar bottom. So these were the two reversals that have happened already. Not the whole market's going to reverse the same day. It's things aren't always done in unison. It's more of a dance where things could happen within a time frame of each other, but not all markets top and bottom the same day. So, but I think we do have, I think, something significant in the dollar. And my preferred short in the dollar, the pound really had a negative week. Okay. Look at that since the Fed. And we did not make new highs. I think that we're going to be looking at a 127 pound in the weeks ahead. So that's quite a bit lower. I wouldn't have foam on the short side. I'd wait for retraces, maybe back towards 36 to lay out shorts. So that's my preferred short. The reason I prefer the short in cable over euro is because the euro pound still looks good to me. So even if you don't trade the euro pound, it gives you your preferred long or short. When euro pound looks good, it's saying that the euro has more relative strength than cable. So when I want to be short the dollar, I'd rather buy the leader. And when I want to be long the dollar, I'd rather short the laggard, which currently is the British pound. My preferred long against the dollar is US dollar yen. People have been following me for a while. Know I had this line drawn for a while. I was looking for 145 ish, and we turned at 5.5. Markets don't always accommodate me, if accommodate people. In fact, if you don't believe it, just talk to the people that are still waiting for 95 in the Dixie. I want to put this out here. When you have a level that is universally agreed upon, and everyone, whether they're an Elliotician, they use GAN, or they use harmonics, and they're all looking for the same price, it either never achieves it or it becomes inconsequential. So that's what happened here in the yen, and I missed it. I'm looking to buy pullbacks in the yen, maybe 147 ish if we get a pullback next week. But everyone that was looking for 95 in the dollar, I think they'll be waiting a while because this was classic. It was a stop hunt. We took out the July lows by about 20 pips, and people that had their stop under this low, well, probably at this early in the day, said, I'm glad I'm not long the dollar anymore. It looks like it's going to crash. And now the market's closing, I don't know, about 130, 140 pips above where everyone got stopped out. Because Mr. Market is mean, and he's going to shake out as many people as possible before the outcome most are looking for occur, and then occur most likely without them. Now tell me that's not a mean guy, Maggie.
That's a crafty guy, Dale. I would say it takes a lot to go toe to toe with that. But you're so right. It's not easy. So while we're talking currencies, I want to get this question in for that Doug posted, which is why are gold and Dixie going up, DXY going up at the same time?
Okay. You may think it's radical, but a guy who I respect, who I listen to on the radio out here in California, his name's Martin Armstrong. You should try and get him, Maggie. Okay, he has a system called Socrates. He did time. He said that the government wanted his program. He wouldn't give it up. But I think he lives in Florida now. And his explanation, which makes sense to me because of what's happening geopolitically, is the S&P, gold, and the dollar are all going to go up together because it's flight capital from Europe. People are moving their money out of Europe. And that's the reason this is happening.
So that would be an interesting and non-consensus view, I would say, because a lot of other people who worry about currency debasement and the deficits we have here say that there's capital flight out of the U.S. to the rest of the world, including Europe, based on valuation. So that would put him in contrast with a lot of other people.
Maybe that's when there was hope for peace in Ukraine. Okay, and we had that run when the dollar came off hard initially on tariffs, and every market outperformed the U.S. Mm-hmm. But I would ask your viewers to go take a look at, besides maybe emerging markets in China, the DAX hasn't made a new high in a while, which is different than what it was 4 months ago. We've had successive new all-time highs again and again in NASDAQ and S&Ps. Where's the DAX? That's the strongest country in Europe. So anyway, that is counterintuitive. Maggie, I think that Europe has too much invested in this. The U.S. is not the only one who supported Ukraine the last 2.5 years, where they lost 1 million men. I don't care what side you're on or what you believe politically, but it's almost like a trade. When you've made a trade and you have so much invested in it, you're no longer rational about the trade. You're not going to just liquidate it. you're going to make your last stand because you can't afford to just take the hit now.
Mm.
So they're invested in it, and I think their next move is that you're going to see NATO troops in Ukraine next year.
Which certainly complicates things. Let me ask
Yeah.
another question coming in. We're going to jump around a little bit, but this is all important stuff, and it's connected to the dollar. So MK asking, do you think the rise in the dollar will cause a correction in the stock market?
Yes,
You do.
I do. But I've seen time periods where the dollar and yields go up, and
Mm-hmm.
87 is a prime example. Yields were spiking; they were going up before the crash in 87, and the dollar was going down. Okay, so the market fought it. It's called disintermediation. So if I'm right about what yields are going to start to do, and the stock market still has a melt up to 7,000, I think we can have an interim correction, and then the market could adjust to yields and still melt up. I still think we're going to see. I can make a case for 7,500, but I do think that we're close to a top here. I wouldn't be surprised. In fact, let me show everyone what was so important in the S&Ps this week.
And while you get that chart up, I just want to comment on something that I saw on X that caught my eye. Peter Bookvar posted it just a short time ago, and he said the S&P 500, in case we don't remember, bottomed in March 2009 at 666.
Yeah.
Today we just touched 6,666. What an amazing, incredible, bizarre, long, strange trip it's been.
Yeah.
But that's incredible. We forget where we've come from, many of us. That is crazy.
So it wouldn't be the end of the world, even if we took out the April lows. It might feel like it because, look, the U.S. economy, government is dependent upon capital gains revenue from the market. They have an interest in seeing the game continue, so they continue to get capital gains tax receipts. If the market tanks, there aren't capital gains, are there? So there is an interest in keeping that game going. But, I think the fact that real estate, which led the whole deal, is rolling over could be the first sign, and maybe the market's the last. But if I'm right and the bonds peaked this week, and we start taking out this 85 and a half level.
Peaked in price, Dale?
Yeah, peaked in price, bottomed in yields. Then we're going to new lows. We could put in a move like this, and we could have new lows in the 20, 30 year, new highs in the 10-year. Maybe the market could fight it for a while, but I don't think forever. Because then there's a tipping point. It doesn't matter. And then all of a sudden it matters in one day, and the whole complexion of the market changes in a day. I've seen it many times.
Right. When you say the market could fight it, you mean the stock market. The stock market could fight it and kind of brush off the higher yields. We have seen throughout the course of the last couple of years that it has been bond yields that have been the pain point for stocks. That is what has sort of led the stock market when we've seen those yields get up into the high fours, near 5. So before we continue on some of the price talk, let me just ask you, because we have a couple questions here about this. What is your time frame when you're talking about this kind of stuff? Because we know somebody called you the market sniper, which I love. We know that you're very tactical. So we're talking about shorter term, I think, than very long term. But just to define the time frame you're looking at this in. Are we looking
the trade? If you did the trade and sold treasuries on the cut, you already did very well. That should be enough. All right. That's a great trade. Right. So what's wrong with 3 days? And now I also give long-term views, but I'm a trader. I take moves like this. Like I've talked about money management every time I'm on with you. I take half in, and then I trail stops at BE or a profit level. And the worst thing that happens is I make money when I have this kind of lead. If you have a 3-handle lead in TLT and you can't make money, turn off your computer.
It's very important. It's very important to, this is fantastic advice, and I hope you're all thinking about this. If you're sitting on any kind of winning position, you can let them run, but if you take some off the table, you live to fight another day.
Okay, so here are the Pinkert 3 Ps. Okay, you probe on your trade, and initially you have risk, right? Like if I wanted to buy bonds, I'm going to risk a close under the breakout because I think it's going to hold and we're going to get another rally. So I probe it. I have risk initially on the trade. Then should I be right and we start to advance half a point, I'll take half off and book it, and then trail my stop either below wherever the low was or my entry. So that's probe, take partials, and protect the remainder. And if the trade doesn't work and you still believe in the trade and the technicals are still there for it, be persistent. Because sometimes I can remember, multiple attempts to finally catch the move I was looking for. Because Mr. Market has been mean to me too, Maggie. All right? That's how I know.
I love it. I have a lot of people asking, saying how much they enjoy these conversations. If we could only do them in a pub live, and we could have the charts and computer screens in front of us. Folks, we also think about this and dream about this, and we will try to make it happen one of these days. I'll promise you that. When, I don't know, but we are brainstorming about it. So a couple questions coming in. Let's stay on this. So Chad making a really good point. So Dale thinks rates will rise, even with Mirren reminding everyone the Fed's third mandate is yield curve control. It's not really its third mandate, but are you fighting the government here, or is the market? Maybe a better question is, does it seem like the market, especially the bond market and the Trump administration, are going to be at odds here? Because if rates are drifting up, that is not what the Trump administration wants to see, and not what the new Fed governor wants to see.
Well, the move I'm talking about will be the motivation for yield curve control, but I don't think it happens till we're at crisis levels, and that would be higher yields than we have right now. So that would be really, because everyone knows what Japan did the same thing, and we really don't know what the repercussions are. I'm sure they're going to try it. They're not going to default. Although we may have a government shutdown at the end of the month.
We haven't even talked about that because there are so many other things.
There's so many things
that have been on everyone's mind.
I haven't even bummed you guys out about Iran and Israel yet.
Yeah. So just in case people missed it and were away from their screens, the Senate rejected the proposal that was passed, stop spending gap. That was proposed by the House, passed by the House. The Senate voted it down. So they are kind of once again careening toward, the 11th hour, which we always assume they're going to resolve it.
It's different this time, Maggie.
You think so? The market usually ignores it because it's right. Learned to, but you think it might be different.
It's the last leverage the Democrats have to try and get some of the cuts that were done in the big beautiful bill to medical. So the people that are scared about what's going to happen, and even if you can afford your own insurance, whatever you do, all the plans are changing. I don't think there's dramatic changes in HMOs and everything, and who reads all the fine print, but I guarantee it's not to our advantage cost-wise. Probably to their advantage. So I think that they're going to go ahead with it. I don't know how long it'll last, but you're right. Recency bias is, it's just political theater. And, there are times I've thought that they would too, but let's face it. The Democrats have very little power with what's going on. They do have power in this situation. I think it's maybe their last opportunity, and they're going to take it.
Well, if we do get to that point, we always know what happens, and that is the market speaks very loudly to everyone. So, but to your point, if we do get there, it's someplace we haven't been in a very long time, and in addition, layered on it all the other uncertainties. There was another great question in here. Okay, this is a little bit specific, but I want to ask it, and I'll put it's about December euro. And I'm going to put your charts back up. You can pull one up if you need to. Christopher asking, Dale, if you short December euro here, where would you put your stop?
All right. Well, I'm not, I really saved that kind of entries. First of all, I think you have the right side of the market and you have to sell rallies, but I really don't give like trade recommendations out to someone that I can't reach or even know for a week in case things change.
Yes, well, that's very responsible of you, and we don't give financial advice over the across the board.
And you know what I would say to this guy? Stop asking people what they would do, and figure out what you will do. And if you don't have enough confidence to trade what you see, you shouldn't be on anything but a demo.
Well, I'm guessing he does have an idea about that, since we know Christopher a little bit. And
okay,
just backstopping your wisdom with his, Dale.
Okay, but there are a lot of people that make that mistake, Maggie, and they just follow people.
Yeah, well, that's exactly right, and
you don't learn.
That's right, and we don't. You're right to sort of flag that as something that you don't want to do. You do want to have your own framework, which you always say. And to that point, Utopia says 4 Ps. Great advice. Thank you for that. So one thing we haven't talked about, and we'll circle back if you have specific questions about anything. We just went over a lot of stuff with bonds and currencies. I do want to ask you about stocks. I mean, we mentioned the incredible run of S&P, and we've sort of touched on the S&P, but we are back at record territory. I mean, we've seen a record run again. So it's interesting to see bond yields moving higher. To your point, stocks seem to be ignoring it right now. We've got a lot of momentum in tech again. So when you're looking across for stocks, you see the potential for a melt up, I believe, in S&Ps. Yeah. What are you looking at in terms of any other indicators that you're watching? Does it seem overextended at this point?
On the 4-hour, I have the first divergence in a few weeks, so that's your first sign. Anyone who uses DeMark has seen like DeMark exhaustion signals fail for about, I don't know, a decade now. No, I'm kidding, but for a while. And you know what's an advantage of doing these kind of interviews? Like I said, there are some people just follow people blindly, but I have viewers that are great traders, and I ask myself, well, why do they need to watch me? Probably the same reason I watch other people that are good, because you continue to learn. It opens your eyes. You only have 2. And he said when I started thinking about shorting S&Ps early in the week, said wait for 6705. So we're about 34 handles away. And with the eclipse coming up, I'm going to try it. Look, every trade starts off to be a day trade, or a day or two trade. If I'm wrong, you still have to put in a stop. You still wait for a reversal day for a signal, or have a money stop in there. So you don't just get short and just say, well, let's see what happens. It's the one thing I stress is before you get in a trade, if you don't know why you're doing it, then you're not going to know where you're wrong, because the why, if it's negated, you get out of the way. Like I could go to natural gas. It's a little disappointing. It's moving sideways, but I bought the bottom here. So, my whole thesis rests upon that this was the bottom. So if nat gas crashes next week, and people that follow me know I've taken partial profits, I may even try and buy it again and put stops under the lows. But if my thesis is a low and the low is taken out, then I should be taken out.
And this is why we like to hear your thoughts, Dale, because there's a lot of wisdom in there. What about the Russell?
Okay.
That hit a record. That is that was actually in the red today. I believe it closed down in the
Yeah.
red. Did not
Good
participate.
eye. Maggie's got a good eye, everybody. You see this divergence? We also have some divergence here on the 4-hour. I think maybe the Russell. Look at this, the daily. Look how long that's been diverging. We haven't taken out a 70 RSI through all of this. I think the Russell's vulnerable, just like the rest of the market here. Maybe maybe 230, maybe even all the way back to 215. I'd wait. You know, I know a lot of people have FOMO when they're watching it, but big deal. So last week you could have paid 240, and now it's 243. So I mean, what did you miss? What you want to miss is the one bad day that changes the trend. And I think we could have those next week. If the dollar's good and rates are heading up, like I said, all the markets don't top and bottom at the same time. But I'm just going to stand by the thesis with even with the market that it could cause at least maybe a 5% correction in S&Ps, 5 to 7, as the dollar confirms a low and starts heading up, and yields getting back above 420 may, move people to take profits before October. October's not a great month.
No.
So September wasn't supposed to be a good month. It was a seasonally. It was a great month.
Right, which is why those seasonals don't always stand
Yeah,
up. And
they
it'll be
don't.
interesting to see if we get something like a 5% correction, if that changes sentiment, or if we get that knee jerk, oh, I have an opportunity to buy lower, which is
Yeah,
what we've
it
seen,
will.
especially coming in from retail. So, it'll be interesting to see. Jim K asking, and we just do these on the fly, so I'm not always sure if Dale's always watching specific things or not, but wondering how you feel about industrial metals / XME.
Okay, I'll look at it. But I forgot to point out that last week I said the way you trade a throwover, which we're still in, right? When we broke this wedge line, is you wait for it to get back inside the formation. Sometimes these things still amaze me. Look at where the low held after the Fed. They took it down about 40 handles after the Fed. It held the throwover line. So this line does mean something. So back under 65.60, Houston, we have a problem.
65.60. Remember
So
that.
100 handles. 100 handles.
Okay. Any thoughts on industrial metals, XME?
Let me look at XME.
Okay.
I don't mind doing something on the fly.
We know you don't. Not many. Say not many.
Is it an ETF? I'll just go under
XME, I think it is.
Here it is. Here it is. 90.39.
Or if you ever
I got it.
Industrials are thinking about.
There it is. Metals and mining.
Yep.
Take profits. See this? This is a 4-hour. Daily's probably confirming, but on the first divergence, I don't short it and reverse, but I'd at least take something off the table if I was long, because compared to this high, which was a spike like uranium spiked, and then we just moved sideways for a few days, and now we're at new highs, but momentum is at a lower high. So to me, that's a little bit of a warning sign. That's a 4-hour.
Fantastic stuff. Chad asking, any thoughts on Bitcoin? You watching Bitcoin?
Yeah. In fact, what gave me a heads up today was watching Ethereum get hit. So I'm bearish. I thought I was wrong, but it went higher than I thought. I thought we were going to peak around 116 or so, but I don't like this candle. And last week I said you have to protect longs under 113. If you're a long-term person, you still have to. And I looked at Ethereum, and it looks worse. I think we could. It was almost twice as weak, which is a change from how it's been. I think we could see 4,000 Ethereum.
Wow.
So
Okay.
I think there are going to be some repercussions. Should I be right about the dollar, even on a rally to 102, which is still a bear market rally in the dollar. I know guys that are looking for astronomical numbers in the dollar, but right now I'm just looking for 102. About 110 euro. Still a big trade. Still 7 handles, but the euro didn't really put in a reversal week like cable did and like Aussie did. So, you know what? I'm always early anyway. I'd rather be in the more forgiving market, which means be short the weakness, not the strength. There'll be time to get short the euro. But there's some big, even the Aussie, I think, could trade back to 62. And I think the metals are becoming a little bit more two-way. Maybe the gold peaks. It didn't make a new high today. It had a decent week. It can make a new high, but I look at the 4 hour and we're starting to diverge. We can have a 3 drive here. Gold's a safer short than this, but even silver's diverging up here. Maybe it's got another buck in it, but I think gold's one of the most crowded trades. In fact, Maggie, I saw a McDonald's commercial and they're using gold. I thought they said salt, but it's sauce. McDonald's is featuring gold sauce. The Wall Street Journal, after I don't know what, $2,000 move, $1,500 move in gold, they're now saying it's very appropriate to own some gold in your portfolio. There are all of these signs that saying this is really crowded. Be careful. Everyone's saying 4,000's a layup in gold by year end. We'll see. I'm going to be looking for shorting opportunities in gold next week.
Something for us all to keep in mind, especially as we have folks like David Tepper saying it should be 25% of people's portfolio. So be careful, folks, and also make sure you know
price matters.
Yeah, what your time frame is too.
I mean, new money here.
Mm-hmm.
I think if you guys are patient, you'll see 3,200 again, maybe 29, and really, you're not buying a value here. There's an old expression that when people line up to buy something, sell it to them.
I love that. Dale, so fun as usual. Such a great way to end the week because we've had a lot of events happen. We've had a lot of people talking, but it's really good to sort of plug it back in, remind everybody to have a framework and think about it. And then pay attention to the narratives that make sense to you. Like you said, understand the why. Why are you thinking about doing this? But really, really great stuff. Thank you so much. Just loved it.
You're welcome. You're very welcome, Maggie.
And before you head off to the weekend, just a reminder, if you haven't checked out my interview with Juliette DeClercq, it is up on the Market House Substack. And in the back half, she's talking a lot about currencies, the U.S. valuations for stocks, the U.S., especially tech stocks, U.S. and Europe, what she thinks happens in bonds. So it's a fantastic conversation. And she's kind of carving out France and UK from her Euro thought too, which is interesting given all the challenges they have. So I encourage you to go check it out. Thanks, everybody. Thanks for ending the week with us. We will see you again next week. Have yourselves a fantastic weekend. Thanks so much.